Yeah, I agree. And at the risk of being called a moon boy, which I'm called anyway. So yeah, all the signals, whether you look fundamental, and I mean, well, like stock to flow, for example, with that, or on chain, um, realized cap, or other metrics, or in the news, the macro news, the number of countries that are opening up to Bitcoin, everything is positive. Of course, there can be a black swan. Of course, something can happen that we haven't seen in the past, or that is a real black swan. But yeah, volatility is low. Like Willy said, the futures premium is low. I watch that like a hawk. If that will go up again, if the leverage will enter the market again. Um, but even yeah, the dormant coins, the people in profit, the people in loss. I can't imagine, unless a black swan, any other scenario that this is one of the best buying opportunities that we have seen in the entire history of Bitcoin. It's compatible to the beginning, 2016, 2011, 2013, or 12 even, the beginning of the bull run.
Hello and welcome to Money Talks. In today's video, leading crypto analyst and trader Willy Woo and pseudonymous Bitcoin analyst and the creator of stock-to-flow model Plan B dive into a discussion about Bitcoin volatility in the current market structure, end of the dollar, and the changing Bitcoin narratives. The two analysts also talk about Bitcoin's price dip and why the cryptocurrency didn't reach their predicted price marks. So without wasting any time, let's dive right into the video.
Stocks fell today because so-and-so did this, or the market felt fear because of that. And it's absolutely bullshit, right? Like if you're in the market, you go, no, actually it hit the technical resistance and there was a bearish divergence and we rejected off that because all traders will have to sell because of that signal. That's why it rejected. And then someone found a narrative that also coincided to this day. And so when I look at the Bitcoin price, I'm like looking at fundamentally who's buying, who's selling. And then you can attach like, right. So like recently, the price has sold down very, very quickly off a week ago. And the narrative that's been attached to it has been, it's tax season sell-off. And wow, they left it last minute because the 18th of April is the deadline for many Americans, and there's assumed that that's tax sell-off. And you look on at the data, and it's like, well, overall there was very mild selling from hodlers. Overall, spot was buying, mass amount of coins moving off chain, on chain, off the exchanges. Actually, spot was buying. Who was selling? That was the futures markets, particularly the calendars market, which is linked to the CME and the sophisticated institutions who are trading the correlation to tech stocks and the S&P. So you got this narrative that it was a tech sell down, but actually it wasn't. It was traders trading this correlation. So that's what I think about narratives in terms of price action.
No, I was about to say the exact same thing. I mean, narratives is nice, but it's for newspapers, for marketing stuff, and there are some deeper trends, some deeper things going on here, and it's well, like Willy said, it's of course technological. It is the better money. So like the internet, if you want it or not, it will be the thermodynamically better thing, and it will win in the end. The earth is round, not flat, and whether you spin a narrative around it that it's flat, it doesn't matter. Maybe it delays it a couple of years, but it will win. So, and also financially, it is an asset. It is an accepted asset, more so than a couple of years ago, and markets are maturing. And the cash and carry trade that we talked about a lot last year almost completely disappeared, which is normal, which is a sign of maturing markets, because a contango premium of 40, 50, even 60% is can't go forever. People, so in my worldview as an investor, as an ex-institutional investor, it's all about arbitrage. And in the beginning, of course, there was arbitrage in Bitcoin only, with exchanges in Korea and exchanges in the Europe and the US, and then making catching the differences, which was an easy way to make money. And now the future, the cash and carry trade was of course a very easy way to make money, and everybody and his mother is doing it. So now that premium has gone down to like 5%, or what is it today, which is still better than in Europe. You're minus 1% on your bank account or something. So there's still, but that those parties are now in place. They have their funds. They're doing this trade, and this market is more efficient and bigger and stronger. So what's left is, for example, the volatility trade. That's one of the big things. You can still make 25% a year with covered call writing and capturing the insane volatilities that have lowered, by the way. But yeah, it's obvious for Bitcoiners that the trend in the price, the fact that it's better technology and it will win and it will be adopted over time, is larger than the volatility. If you're buying vol, you buy it low. So when the volatility is low, you can buy a call option and a put option, for example. And then when the volatility goes up, you can sell them again and at a higher price and relatively delta neutral. So you bought or sold, could also, right? So you buy the put and the call. But what's much less risky is selling the volatility when it spikes up. So you sell the call and you sell the put, which is more risky, by the way. But because you can sell the call with collateral, with Bitcoin as collateral, but there is no hedge for the selling the put. That's unlimited risk if you're wrong. So, but when there's the volatility pattern can be modeled with Garch models, with all kinds of volatility models, and it's very predictable. So volatility it spikes up, and then it slows down. It sort of it like a fire. It goes down, and you can model that. So when it spikes up, you have to sell the volatility, and then you buy it back later when you know for sure it goes. The spike will not be there forever. So
it's real interesting in terms of like there was a lot of bearishness. Maybe we got a little bit of a pump in the last 24 hours, but like it's been super bearish and people going, oh, it's going 20 or whatnot, and capitulation is going to mount. But if you were to look at our valuation models like MVT signal, MVTS, every capitulation, like from the 2018 capitulation from 6,000, 3,000, or the COVID capitulation, they really started from medium to high levels of valuation of Bitcoin, according to that metric. And we're actually really undervalued right now. It's near extremes of undervaluation. So I think it's really hard to mount a capitulation because it's oversold to such a degree. So on-chain is like, at that stage of what we call mean reversion, it's so far out from its mean that the gravitational force is towards up, right? Which is where it wants to be. So anyone shorting this in correlation to any crash might have some success, but I think it's limited. It's limited because of that mean revertive force on basically fundamental on-chain valuation metrics. So I feel like that's it. We're just waiting for futures demand to come in. Yeah, it's always interesting because I don't know, it's like the market structure of Bitcoin changes very regularly, almost every year. Like we had a major sea change in like the third and fourth quarter of last year in the structure. Huge futures dominance came in, and so I've done a lot more work on predictive models using futures meshed with on-chain. It's really interesting now. It's like one of the best model I have now, which is man, it takes a lot of number crunching to get this stuff out. It basically looks at a lot of the on-chain data, many inputs, many signals, and also many signals from futures data. And it kind of self-optimizes and finds out over any time period what is important and what price is responding to, and it gives it weight. And like it's 55% on-chain still, which is really interesting because a lot of people, you know, you're used to people saying it's hocus pocus and it's astrology, but the quantitative model I'm working with, the best that I've come up with so far, is, yeah, it's 55% predictive using on-chain and 45% futures currently. So yeah, that's really interesting.
Plan B, who created the Bitcoin stock-to-flow or S2F model, implied that only a black swan incident could drag the price of Bitcoin down to $24,500. The anonymous Twitter pseudonym in the past has missed Bitcoin's price predictions on some occasions, but his bullishness on the asset still remains intact, asserting that it could reach $100,000 at the end of the year. The Bitcoin analyst has previously said in a tweet that he doesn't see a reason that would bring Bitcoin's price down to its current realized price or average cost price at 24.5K. He also noted that there were only 3 times that such a capitulation occurred in history. So what are your thoughts about Plan B and Willy Woo's most recent statements on Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.